Friends, today we have a webinar on deduction under Section 80P in respect of income of cooperative societies. We have Gandhi, who's a CA and an LLB. Uh, Dharan he's a rank holder in the CA final. He was a 7th rank holder. He was also a rank holder in the intermediate examination. He was the 38th rank in the intermediate examination. He had an illustrious academic record. Currently, he is practicing in the field of direct tax litigation and appears regularly before the High Court Tribunal and DRP and CIT appeal. He has argued writ petitions before the Honorable Bombay High Court at the age of 25. Presently, also assisting a renowned advocate Hiru Rai, and has also acquired training in his chamber for around 2 years. He's worked with Advaita Legal Law Firm associated with KPMG as an associate for 15 months. He's handled litigation for various MNCs and listed companies like Edelweiss Group, Future Group, General Motors, uh, Dalmia Group, etc. He's worked as article clerk with Messrs. CVK and Associate Standard Accountant Muru, and under the guidance of Mr. C.N. Waze and Mr. S.Y. Joshi. He's regularly contributing in professional journals and publishes publications on direct taxes, international taxes, and transfer pricing issues. He was a co-author in the book titled Interpretation of Statutes, Frequently Asked Questions. He's rendered talks at various forums on various issues in context of direct tax. He has been a paper writer for direct tax paper in Ghatkopar and Mulund CA Study Circle RRC 2016, held by at Kashid Alibag. The topic taken was search, seizures, surveys, tax avoidance, and tax planning. His area of interest is direct tax, international tax, and transfer pricing. I would first like to give him a memento as a token of our appreciation. Now over to Dharan.
Good afternoon, friends. Firstly, I would like to thank the Chamber of Tax Consultants for giving me this opportunity to take this topic of reduction under Section 80P in respective of cooperative societies. Nowadays, the litigation has increased in respect of reduction under Section 80P. This is because reduction under Section 80P was granted by the government so as to encourage and give impetus to the cooperative movement which was going on in India. But then there are several instances where the assessees have misused this provision, and therefore the income tax department has become very strict. And also, of course, there are various rulings which have come up of late which have caused little stir in this section 80P. So before going into this topic, first let us go to some of the introduction part of my talk. Cooperative society has been defined under the Income Tax Act under Section 290. They say cooperative society means a cooperative society registered under the Cooperative Societies Act 1912 or under any other law for time being in force. Whether a cooperative society is a person under the Income Tax Act, yes, because they fall under the category of association of persons. Insofar as the tax rate is concerned for assessment year 17-18, slab rates are up to 10,000 10%, 10 to 20 20%, and about 20 30%. Surcharge is at a rate of 12% if the net income exceeds 1 crore, and education cess and secondary and higher education cess at 2 and 1% respectively. The cooperative society is a normal person and he has to compute his income under various heads as given under the Act, which is income from house property, profits and gains of business and profession, capital gains, and income from other sources. With effect from AY 17-18, the ICDS are applicable for computing income under the business income and income from other sources, and therefore the cooperative societies have to take care that they follow the ICDS while computing their income. And there are various aspects in ICDS which will hit a cooperative society, like in case of a cooperative society engaged in the business of giving credit facility to its members, he has to recognize they have to recognize their income on accrual basis as given in ICDS 4. And there are similar various other clauses under the ICDS which may apply to a cooperative society, and one has to take care while computing income from AY 17-18 and henceforth. there are various types of cooperative societies having various purposes and objects, like housing society, producer society, agricultural marketing society, consumer society, cooperative bank, credit cooperative society, and federal society. And Section 80P deals with various types of cooperative societies, various types of income, computation of the income or deduction under Section 80P is also given in Section 80P. So this is the basic Section 80P, which provides deduction in respect of income of cooperative societies. Section 80P1, if we may read, it says that where in case of an assessee being a cooperative society, the gross total income includes any income referred to in subsection 2, there shall be deducted in accordance with and subject to provisions of this section, some specified in subsection 2 in computing the total income of the assessee. 80P1, we may in a slang term say that it is in the nature of a charging section, and it gives deduction to a cooperative society, and the deduction is as per the provisions of subsection 2 while computing the total income of the assessee. Now, why deduction has been given under Section 80P to income of cooperative societies? There are several Supreme Court and High Court judgments, and they say that it is introduced with a view to encourage and promote growth of cooperative sector in economic life of the country and in pursuance of declared policy of the government. Now, with this background and with this object of the government to provide encouragement and growth to cooperative sector in economic life, one may also be correct in stating that the provisions of Section 80P are in the nature of beneficial provisions and have to be interpreted in a liberal manner, as held by Supreme Court in case of Bajaj, and also held by Supreme Court in various cases even under Section 80P. This is the basic structure of Section 80P. 80P1 is the main section which allows deduction from income of cooperative societies. 80P2 prescribes the categories of cooperative societies eligible for deduction, types of income of such cooperative societies eligible for deduction, quantum of deduction, and certain other ancillary conditions for claiming a deduction. 80P3 is a provision wherein the government wants to curb double deduction. So, if a society is claiming deduction under earlier provisions of Chapter 6A, like Chapter 6A Part C, like 80IA, 80IB, then he cannot claim the deduction again under Section 80P. So, this is basically to curb double deduction of the same income. In any case, one cannot claim deduction which exceeds the net total income of the assessee. And lastly, 80P4 is an exclusion provision, and it says that application of Section 80P will be excluded to cooperative banks other than primary agricultural cooperative society or primary cooperative agricultural and rural development bank. So this is the structure of 80P. There are 4 subsections. One is the main section. 2 prescribes what societies, what type of incomes, quantum, and the conditions for claiming of deduction. 80P3 deals with the non-allowability of double deduction if claimed under any earlier sections of Part C of Chapter 6. And 80P4 is an exclusion provision which has been introduced from 1/4/2007 so as to exclude the application of 80P to cooperative banks other than the primary agricultural trade society or a primary cooperative agricultural and rural development. With this background in mind, if we jump to provisions of Section 80P2, which is the main section, machinery provision, I may say, and which prescribes various items of income in respect of which a cooperative society can claim deduction. And there are 6 clauses of Section 80P2. And the clause A says that profits and gains of business attributable to certain activities in which cooperative societies are engaged. And under 80P2A, there are 7 sub-clauses which we will deal with in the later part of this talk, wherein the profits and gains of business attributable to those activities are allowed as deduction while computing the total income of corporation. 80P2B deals with profits and gains of business in case of a cooperative society being a primary society engaged in supplying milk, oilseed, fruits, or vegetable raised or grown by its members, either to a federal cooperative society, government or local authority, government company, corporate. C part deals with profits and gains of business attributable to activities other than those specified in clause A and clause B above. So if the society is carrying on certain business, and if the business activity is different from what has been specified in clause A and clause B, then they can claim deduction under clause C subject to certain limits which they have prescribed. Clause D provides deduction under section 80P in respect of interest or dividends derived by cooperative society from its investment with any other cooperative society. So therefore here, as compared to clause A, B and C, here we may find that A, B, C deals with the profits and gains of business, whereas here clause D deals with specific type of income, which is interest or dividend derived by a cooperative society from its investment with any other cooperative. Clause E deals with the income derived by cooperative society from letting of godowns or warehouses for storage, processing, or facilitating the marketing of commodities. And F deals with a cooperative society other than housing society, urban consumer society, society carrying on transport, or society engaging in performance of any manufacturing operation with the aid of power, and the gross total income does not exceed 20,000 rupees. The amount by any amount of income by way of interest on security or income from house property. Now, why the structure of 80P2 has been highlighted in the beginning part of the talk? This is because if we see clauses A, B, and C, the term used by the statute is profit and gains of business. Whereas if we see clause D, E, and F, firstly, the term profits and gains of business is clearly missing. Two, they have given or specified certain items of income which can be claimed as deduction, which may or may not be offered to tax under the head profits and gains of business, like interest or dividend, like income derived from letting out of good house, or income by way of securities, or income from house property. So this is the basic structure of section 80P2. With this background in mind, now let us proceed to provisions of section 80P2A. 80P2A allows deduction of whole of the amount of profits and gains of business attributable to any one or more of the following activities of a cooperative society: carrying on business of banking or providing credit facility, cottage industry, marketing of agriculture produce given by its members, purchase of agricultural implements, seeds, livestock, or other articles intended for agriculture for the purpose of supplying them to its members, processing without the aid of power of agriculture produce of its members, collective disposal of labor of its members, or fishing or allied activities. Now, here the most important part of section 80P2A is the term profits and gains of business. 1. 2. Attributable to. These terms have their own meanings. They have been not defined under the Act. However, there have been various litigations, and the courts have had the opportunity to deal with these terms, and therefore it is imperative for us to deal with the term profits and gains of business and attributable to. The Honorable Supreme Court in case of Stodgar's Cooperative Sales Society Limited Society, or 322 ITR 283, dealt with the term profits and gains of business appearing in section 80P2A. And they have clearly specified and clearly given a finding that income which is taxable under other heads of income, like income from other sources, cannot be taken as profits and gains of business, and therefore will not qualify as a deduction under section 80P2A. Similar finding is given by Uttarakhand High Court in Nainital District Cooperative Bank 318 ITR 62, where again the court has said that income from house property cannot be claimed as deduction under section 80P2A. Therefore, one thing is for sure, under chapter 4, there are 5 heads of income. One is not applicable to cooperative society. The other 4 heads of income will have a significance while computing deduction under section 80P. Only if the income of a society is taxable under the head profits and gains of business and profession, section 28 to 44, then only the same can qualify as a deduction while computing under deduction under section 80P. So now once we have understood the concept that only profits and gains of business of cooperative society are eligible for deduction, How do you go about the term attributable to? The Supreme Court in case of Cambay Electric Supply Industrial Company Limited, 113 ITR 84, so it's the main case law, they have clearly specified that the term attributable to is much wider in expression than the term derived from. And the term derived from was again subject matter of interpretation by Supreme Court in case of Liberty India, wherein the Supreme Court held that derived from can be understood to mean only those income having first degree nexus with the actual activity. Therefore, attributable to is something which is more than derived from, something which is more than first degree of nexus. Allahabad High Court in case of Cooperative Cane Development Union, 118 IDR 770, held that the expression attributable to suggests that the legislature intended to cover receipts from sources other than actual conduct of business of the SSE. This is very important. If we see both the case laws together, then we can come to a conclusion that any income attributable to the activity specified in ATP2A can be taken as deduction, though it may not be necessarily derived from the activity specified in section ATP2. For example, the term used by it under section ATP2A1 is banking business. Now, interest which I earn from lending in respect of the banking activities is the income which I derived from banking business. However, there might be several incidental and ancillary income which is not directly connected to my banking business, but which is attributable to the banking business. Like there might be locker rent, or there might be commission for underwriting of shares, etc. So this is not something which is directly falling under the definition of the term banking business, but it is something which is an incidental and ancillary to the banking business, and therefore it shall get covered by the term attributable to, and therefore will qualify for deduction under section 2A. Therefore, what we have seen here is that ATP2A only deals with profits and gains of business, and those profits and gains may not be necessarily the actual profits and gains derived from the business, but may also include the incidental and ancillary receipts from that business because of the term used, attributable to. So with this background in mind of the meaning of the term attributable to and profits and gains, if we turn to section ATP2A1, this section ATP2A1 can be divided into two parts. One, profits and gains of business of cooperative society engaged in carrying on business of banking, and two, profits and gains of business of cooperative society engaged in providing credit facilities to its members. Supreme Court in case of Todgar 322 ITR held that ATP2A1 contains two elements of business. One is banking business and one is providing credit facility to its members. So if a society is engaged in banking business, it will fall under section ATP2A1, as well as if the society provides credit facilities to its members, may not be necessarily engaged in banking business, it shall again qualify for deduction under section ATP2A1. There is an exception in section ATP4 with effect from 1/4/2007. They have specified that provisions of this section ATP shall not apply to any cooperative bank other than the primary agricultural credit society or a primary cooperative agriculture and rural development bank. Therefore, if a cooperative bank, which is definitely a cooperative society, would have otherwise qualified under ATP2A1 because it is in banking business. However, with effect from 1/4/2007, since an exception has been created under section ATP4, therefore cooperative bank, though carrying on a banking business, shall not be eligible to claim deduction under section ATP2AI. The regional rural banks were earlier allowed deduction under section ATP2AI, on the ground that they are deemed to be cooperative banks. One section 80p4 has been brought into statute, which specifically excludes the application of section 80p to cooperative banks. Regional rural banks are again not eligible to claim reduction under section 80p, and this has been clarified by CBDT in circular number 6 of 2010. If you see the exception, they say it shall not apply to a cooperative bank other than a primary agricultural credit society or a primary cooperative agricultural and rural development bank. So therefore, two types of banks, which is the primary agricultural credit society and primary cooperative agriculture and rural development bank, they shall be eligible to claim reduction under section 80p2ai. Meaning of the term cooperative banks. The term cooperative bank has been defined under the Banking Regulation Act 1949 as cooperative bank means a state cooperative bank, central cooperative bank, and primary cooperative bank. Further, the term primary cooperative bank has been defined, which means a cooperative society other than the primary agricultural credit society, the primary object or principal business of which is transaction of banking business, paid up share capital and reserves of which are less than 1 lakh rupees, and the bylaws of which do not permit admission of any other corporate society as a bank. Therefore, to qualify as a primary cooperative bank, the bank has to satisfy three conditions. One, its primary object or principal business is business of banking. Two, the paid up share capital reserve is less than 1 lakh. And three, the bylaws of which do not permit admission of any other corporate society. Insofar as state cooperative bank and central cooperative bank is concerned, it has been defined by the NABARD Act 1981 to mean that principal cooperative society in a state, the primary object of which is financing of the other cooperative societies in a state, and central cooperative bank has been defined as principal cooperative society in a district in a state, the primary object of which is financing of the other cooperative societies in that district. This is the meaning of the term cooperative bank. This meaning of the term cooperative bank will assume importance once we go to the term cooperative credit society. Primary agricultural cooperative credit society has been defined by the Banking Regulation Act 1949, as well as the primary cooperative agriculture and rural development bank has been defined under the Act section 80p. Primary agricultural credit society and primary cooperative agriculture and rural development bank are eligible for deduction, whereas cooperative banks are not eligible for deduction under section 80p. Coming to the first part of banking business of section 80p2ai. 80p2ai provides deduction of whole of the profits and gains of the business of a cooperative society engaged in carrying on business of banking attributable to such banking. The term banking business has been defined under the Banking Regulation Act section 5b as accepting for the purpose of lending or investment deposits from public, repayable on demand or otherwise, and withdrawal by check, draft, or so that means a person who is accepting deposits from public to give loan to public or for investment is carrying on a banking business. Necessarily, the interest which I receive from lending is an income directly derived from the banking business. However, as we have seen earlier, the term used for allowability of reduction is profits and gains attributable to the banking business, and therefore the court had the opportunity to deal with various items of incomes which are not directly derived from banking business but which are part and parcel, or I may say incidental or ancillary to the banking business. Supreme Court has held that income from investment in government security is allowable as deduction. Dividends on share of Industrial Finance Corporation is allowable as deduction. Income from investment in compliance with statutory provision, investment in the RBI SBI is allowable as deduction, held by Supreme Court. In case of banks, as per the Banking Regulations Act and the RBI guidelines, they are required to deposit certain amount with the RBI and State Bank of India. On those deposits, they get their interest income. So those interest income are not arising out of the banking business, but since to carry on the banking business, they are required to maintain the deposits with RBI and SBI. Supreme Court has held that the interest from those investments is allowable. Income from commission and brokerage by dealing in bills of exchange, hundis, promissory note, etc. are banking income. Admission fee, incidental charges, financial penalties, locker rent, interest from investment in IVP, KVP, and NSC are all income from banking business. Income from letting out surplus space, which is not assessed as business income, is also allowable as deduction under Section 80P 285. Now, this is somewhat controversial because when I let out my surplus space, the income which I derive from letting out of surplus space is not something which I derive from my banking business, and is not something which is incidental or ancillary to my banking business. However, in this court, the Madras High Court has held that it amounts to income arising from leasing of commercial asset. And since the income is arising from leasing of commercial asset and it has been assessed as business income, therefore, deduction is allowed under Section 80B 2A1. Of course, there are contradictory judgments in case of renting income, which I may refer to in the later part of the talk. Then there is a Karnataka High Court judgment wherein the courts have held that income from leasing of immovable property is something which is derived by the cooperative bank from banking business as per Section 6(1) of the Banking Regulation Act 1949, which incorporates leasing. And on that basis, the Karnataka High Court and the Patna High Court have held that income from leasing of immovable property is nothing but income from banking business. Underwriting commission has been held to be income from banking business by Supreme Court. Interest on refund of income taxes, an interesting case of Punjab and Haryana High Court held that since the income tax was paid by the SSC on the income derived from banking business, therefore refund, if any, arising therefrom and the interest on the refund relates to the banking business, and therefore it is allowable as deduction in Section 80. Similarly, commission for collecting electricity is nothing but income from banking business. All these instances in the previous slide and this slide point out to the fact that banking business is a very wide term. All the income which a bank derives is attributable to such business income. Even the surplus funds which the bank keep in deposit with some other banks or they invest it somewhere, the income from those surplus funds is also nothing but income from banking business. And it has been held by Supreme Court to be allowable as deduction under Section 80P 2A. This is subject to the fact that your income is taxable under the head income from business and profession. However, if a cooperative society engaged in banking business derives any income which is not per se taxable under the head profits and gains of business or profession, but under other heads, then in that case, of course, the judgment of Supreme Court will apply to Totagar Cooperative Society, and those incomes shall not form part of the income from banking business and not allowable as such under Section 80P. These are the cases where the courts held that the income is not something which is derived from banking business or attributable to banking business. Interest on loans extended to employees, the Rajasthan High Court said that advancing of loan against PF and housing loan to employees, the interest on that loans are not income derived from or attributable to banking business. With respect, a bank who is into the business of providing loans to general public shall include loans to employees also, and therefore interest on loan extended to employees shall form part of income from banking business. Interest from investments of employees PF is again not income attributable to banking business because the funds belong to the employees. And the Uttarakhand High Court and Patna High Court judgment, which states that rental income from house property, which is taxable under the head income from house property, cannot be taken as something which is attributable to banking business, and therefore deductions cannot be given under Section 80P2. Therefore, everything will depend upon the facts of particular case. A cooperative society which is otherwise engaged in banking business may derive certain incidental ancillary income. If it is attributable to business of banking, not taxable under other heads of income, then one can claim deduction under Section 80P2A1. This we have completed with 80P2A1, income, profits and gains of business of corporate society, engaged in carrying on business of banking, first part of 80P2A1. However, as we have already discussed, 80P2A1 deals with two parts. One is income from banking business and income from income of cooperative society engaged in providing credit facilities to its members attributable to such activity. This has been subject matter of various litigation. The first and foremost litigation is after the applicability of Section 80P4. 80P4 specifically excludes application of Section 80P2 to cooperative banks. Various cases, the assessing officer tries challenging that a cooperative society is a cooperative bank and not a credit cooperative society, and therefore its income is not allowed to be deducted under Section 80P2A1. Such cases came up before the High Court, and we have certain judgments of the High Court. Bombay High Court, in case of Goa PWD Staff Cooperative Credit Society, held that in the case of the assessee in that case, they were only engaged in providing credit facility to their members. They were not providing credit facilities to non-members, and therefore they cannot be treated as a cooperative bank. Mind you, Part B of ATP2AI allows deduction of profits and gains of business of cooperative society engaged in providing credit facilities to its members. And when a cooperative society is only providing credit facility to its members, not providing any facility to non-members, the Bombay High Court held that it is not a cooperative bank but a cooperative society. 242 Taxation and Allied Laws. Similar view is upheld by or taken by the Madras High Court in 293 CTR 367, Nilgiri's Cooperative Market Society. Whereas in case before the Karnataka High Court, the High Court held that the assessing officer has no authority to resolve the controversy as to whether a cooperative society is a cooperative bank or is a cooperative credit society. This issue has to be resolved by RBI. An interesting case came up before the Bombay High Court in case of QPM Urban Cooperative Credit Society, 377 ITR 272. In this case, the cooperative society was engaged in providing or engaged in transactions with non-members. Though the transactions with non-members were insignificant or minuscule, but still it was engaged in entering into transactions with non-members. The assessing officer in this case held that you are a cooperative bank and therefore you are not eligible to deduct under Section 80P2A1 as per Section 80P4. Matter traveled to the High Court. High Court said that for one to become a cooperative bank, the definition of cooperative bank under the Banking Regulation Act was applied. It states that a cooperative bank has to satisfy three conditions. One, its primary business must be that of transaction of banking business. Paid up share capital and reserves must be less than 1 lakh of rupees. And the bylaws do not permit admission of any other cooperative society. In this case, High Court held that one of the conditions is satisfied, but the other two conditions are not satisfied. And since all three conditions are not satisfied cumulatively, a person or the assessee would not be treated as cooperative bank as per the Banking Regulation Act. And merely because it has entered into a transaction with non-members which are insignificant and minuscule, deductions cannot be denied to the cooperative bank under cooperative societies under Section 80P2A1. However, in the parting part of the judgment, they state that to the extent of income earned which is attributable to dealing with the non-members, no benefit of Section 80P would be available. So this is an important part, or this is an important judgment, wherein the Bombay High Court has held that though the cooperative society is engaged in transactions with non-members, deduction under Section 80P2A1 cannot be denied because it is not a cooperative bank, and that only a proportionate part of income which they have earned while dealing with the members would be eligible for deduction under Section 80P. Here, an important point to be noticed is that what is the distinction between cooperative bank and cooperative societies? The Banking Regulation Act has defined the term cooperative banks. They have also defined the term credit cooperative society. We have already dealt with the term cooperative bank. However, they have defined the term credit cooperative societies to mean a cooperative society, the primary object of which is to provide financial accommodation to its members. Whereas cooperative bank is a bank which engages in banking transaction, banking business, And banking business means taking or giving of loans or deposits to general public. Therefore, if I am only dealing with my members, I am a credit cooperative society. I am dealing with general public, I am cooperative bank. Plus, under the Banking Regulation Act, license is required to be obtained from the RBI to work as a bank. Section 7 also says that no other person, no other cooperative society except the cooperative banks shall use the term bank, and they shall not carry on banking business. Therefore, legally speaking, under Banking Regulation Act, even if I am dealing with non-members, I am not eligible, or I cannot use the term bank, and I cannot engage in banking business as I am not having any banking license. Legally speaking, even if I deal with non-members, I am still a cooperative credit society. However, the department is not accepting this view, and they say that once you have entered into transaction with non-members, you are a cooperative bank and you are not eligible for deduction under Section 80(2)(a)(1). With this background in mind, now the controversy has now been cleared by Supreme Court 1 week back. Judgment Citizen Cooperative Society Limited versus ACIT 84taxman.com/114. Now, this is an important judgment in this context because they have dealt with the issue that if a credit cooperative society engages in the activity of granting loan to general public as well, can they claim deduction under Section 80(p)(2)(a)(1). The important part of this judgment is that Supreme Court, going into the Banking Regulation Act, they have clearly specified that the cooperative bank in that case is not, cooperative society in that case is not a cooperative bank because they don't have any license from the Reserve Bank of India. Plus, in that case, Reserve Bank of India has itself verified that the credit cooperative society, which is Citizen Credit Cooperative Society, is not carrying on the banking business. Therefore, the first finding of Supreme Court is Citizen Cooperative Society is not a cooperative bank. In spite of that finding, Supreme Court still goes on to hold that the credit cooperative society, since it is engaged in giving loans to general public as well, deduction under Section 80(p)(2)(a) is not available because assessee is not a cooperative society meant only for its members. This is the finding of the Honorable Supreme Court. They have laid down the law of land and it is binding on each and every person in this country. So in this case, there were two types of members, a resident and ordinary member, plus there were some nominal members who were making deposits with the assessee, and these deposits were utilized to advance loan to the resident and ordinary members. Therefore, loan taken from outsiders and loan given to members. Supreme Court held that this is nothing but a finance activity. Supreme Court also found that you are engaged in granting loans to general public as well. 80(p)(2)(a)(1) deals with a society which is engaged in providing facility only to its members. You are catering to non-members. You are not eligible to deduction under Section 80(p)(2)(a)(1). This was not the end. They also imposed cost on the society for this appeal. Whether the law laid down by Supreme Court is correct or not, I have two views in favor and against. One, in this case, if one sees the purpose or logic behind 80(p)(2)(a)(1), where deduction is allowed to a society engaged in providing credit to its members, the whole purpose will be lost if they cater to non-members or general public as well. Plus the fact that the deduction has been denied to cooperative banks on the ground that other banks, scheduled banks, nationalized banks are not eligible for deduction, and therefore cooperative banks are also not eligible for deduction. And if a credit cooperative society cater to general public as well, they shall be at par with the cooperative bank, though not in legal terms, but if it is substance over form, they are nothing but doing banking business. This is one part, and for this part, maybe Supreme Court is correct. We are not to comment on the correctness of the judgment of Supreme Court. This is with respect, utmost respect to the Supreme Court. However, there's one more point is that 80P2C. If we take into consideration the provision of section 80P2C, 80P2C says that in case of cooperative society engaged in activities other than those specified in clause A and B, either independently of or in addition to all or any of the activities so specified, so much of its profits and gains attributable to such activities as it does not exceed 50,000 rupees. So the point which I am trying to make is 80P2C itself visualizes a situation where a cooperative society falling under clause A and B can carry on some other activity other than the activity specifically specified in clause A and B, which means a cooperative credit society engaged in providing credit to members can also engage in the activity of providing loans or facilities to non-members. This type of situation is visualized by 80P2C. In fact, in one of the cases which was there before the Andhra Pradesh High Court, the issue was whether, as a cooperative society, my object was to provide agricultural implements to my members. I provided agricultural implements to non-members. So the issue was whether deduction under section 80P was to be allowed. Andhra Pradesh High Court in that case held that to the extent of activity with the members, you're allowed deduction under section 80P2A, whereas to the extent of activity with non-members, the society is eligible for deduction under 80P2C. This judgment is discussed in the later part of the chapter. So the point which I am trying to make is that section itself visualizes a situation where any cooperative society falling in clause A and B can engage in any activity other than the activity specified in those clauses. In the case before Supreme Court, again, society was engaged in activity other than providing credit facility to its members, which was providing credit facility to non-members. Therefore, maybe if section 80P2C would have been brought to the notice of Supreme Court, maybe the judgment would have been little different. I don't know. So there are points going in favor and against the judgment. We have seen many cases where the assessees being cooperative societies try to misuse the provision of section 80P2, and therefore this is a reminder call for them. However, maybe 80P2C has been missed by the Honorable Supreme Court with utmost respect. Now, there are case laws to the effect that a cooperative society which is engaged in some activity and its object clause also includes granting of loan to its members, and they have been held eligible for deduction under section 80P2A1. For example, a housing cooperative society. Object clause of the housing cooperative society included giving money or loans to its members. Madras High Court held that the interest derived by loans in respect of credit facility to the members is eligible for deduction under section 80P2A2. This is because the object clause also includes granting of loans. Therefore, these judgments also throw light on the fact that I, as a society, may engage in more than one activity falling under clause A or clause B. For each activity, I may be eligible for different deductions which I can keep. Now, whether judgment of Supreme Court in citizen cooperative society can be made applicable to these cases, the answer is no, because Supreme Court has primarily gone on the fact that there the society was engaged in providing facilities to non-members, whereas in all these cases, facilities or loans have been granted only to members. To this extent, I feel Supreme Court judgment cannot come in way of this practice. So, what do you mean by cooperative society? We have seen that. Now, the point is, what does the term profits and gains of business attributable to the activity of providing credit facility to the members mean? Let us compare the first and second limb of 80P2AI. There are two parts. One say that income from banking business, and one allows deduction in respect of income from providing credit facility to its members. Banking business is a wider term as compared to providing credit facility to members. Banking business may involve various activities which a bank are eligible to conduct. However, a society engaged in providing credit facility to its members are those societies which have to provide credit facility to its members and are not engaged in any other activities. Therefore, we have seen the term attributable to profits and gains of business of corporate society. Now we apply the term attributable to providing credit facilities to its members and see what all income can form part of profits and gains of business of such cooperative societies. Supreme Court in famous case of Totagar Cooperative Housing Society have clearly held that if I have some surplus fund which I have deposited in some bank or made some investment, and income is derived from those surplus funds from those investment, that income is chargeable under the head income from other sources, not taxable under the head profits and gains of business and profession, and therefore they do not qualify for deduction under section 80P2A1. However, in case of those societies engaged in carrying on banking business, investment of surplus funds in some deposits or in any investment giving rise to any income, such income would qualify for deduction under section 80P2AI because, as I specified earlier, banking business is a term which is much wider than the term society engaged in providing credit facility to its members. This judgment of Supreme Court has been followed by Delhi High Court and Gujarat High Court, recent judgments. Also, the Punjab and Haryana High Court has held that investment from interest from investment in reserve funds from call deposits with various banks are not eligible for deduction in respect of a credit cooperative society. Similarly, dividends received from UTI mutual funds and interest from saving bank accounts are not eligible for deduction. However, there is a surprise. In spite of this Supreme Court judgment, there are two Karnataka High Court judgments clearly laying down that if I have some idle fund, I deposit in the bank, which a prudent businessman does, I derive interest income. That interest income is eligible for credit deduction under section 80P. Karnataka High Court judgment in case of Tumkur Merchants Sohadra Credit Cooperative Limited 230 Taxman 309 and Karnataka High Court in case of Guti Gedara Credit Cooperative Society 377 ITR 464. So in this case, they have distinguished the judgment of Supreme Court in Totagar. Now, how they have distinguished Totagar? In case of Totagar, the society was engaged in two activities. One was giving credit facility to its members, and other was marketing of agricultural produce of its members. The deposits of surplus fund made in the bank was in respect of liability which was payable to the members of the society in respect of marketing of their agricultural produce. So Karnataka High Court in this case is holding that the surplus fund in case of Supreme Court was nothing but liability which was payable by them to the members of society in respect of marketing of agricultural produce. Whereas in the case before the Karnataka High Court, it is in respect of idle fund out of their business income, out of their business of providing credit facility to the members. In such a manner, they have distinguished the judgment of Totagar with utmost respect. Totagar Supreme Court also deals with the case where a surplus fund of cooperative credit society has been invested somewhere and interest has been received therefrom. They were dealing with both the situation 80P2A1 and 80P2A3. In either of the scenarios, Supreme Court says that it is chargeable under their income from other sources and therefore not eligible for deduction under section 80P. Following to Karnataka High Court judgments, there are three tribunal judgments: Mumbai Tribunal, Pune Tribunal, Bangalore Tribunal, which has held that 80P2A1 deduction is eligible in respect of interest income derived from capital which was idle and deposited somewhere so as to earn interest. Now, in this case, we have a Supreme Court judgment, Totagar, We have two High Court, Gujarat and Delhi, against the SSC, and we have two High Court judgments, Karnataka, in favor of the SSC. And relying upon the famous Supreme Court judgment which says beneficial view should prevail, one can use judgment of Karnataka High Court and Tribunal and take a call that interest income in respect of deposits which are out of the idle funds of society is eligible for deduction under section 80(p)(2)(a), right? Especially in case of those interests which are derived from savings bank account, because that is definitely incidental and ancillary to providing trade facility to the member. Though the Pune Tribunal, the earlier case which is reported on the last point, they have held that interest from saving bank accounts are not eligible. However, in my view, interest from saving bank accounts is definitely eligible because that is part and parcel of their activity. Now, what do you mean by the term credit facilities? There are court judgments to the effect that if I sell goods on credit, that does not amount to credit facilities. Hire purchase will not amount to credit facilities. However, chit fund business would definitely amount to credit facilities, and the income from that business would be eligible to exemption under section 80(p)(2)(a). 80(p)(2)(a)(1) provides deduction in respect of income attributable to providing credit facilities to its members. What if I provide credit facility to my members of my members? Therefore, if I am an apex society and there are several societies who are my members, and I provide loans to members of those societies, Supreme Court has held that you cannot extend the meaning of the expression members to include members of member societies. This again, if we see from other angle, here the court has definitely denounced the concept of liberal interpretation. Whereas later part of the talk, we will see cases where the courts have allowed deduction in case where facilities or income was derived from rendering services to members of member societies. With this part, I think I have completed section 80(p)(2)(a)(1) dealing with the banking business and societies engaged in providing credit facilities to its members. Since 80(p)(2)(d) is connected with this aspect, we shall now take 80(p)(2)(d). 80(p)(2)(d) provides deduction in respect of interest or dividend which is derived by a cooperative society from its investment with any other cooperative society. Nowadays, it's a very hot topic because there are many scenarios where various societies have invested their funds, surplus funds, in cooperative banks and have derived their interest income, and they are claiming deduction under section 80(p)(2)(d). And the assessing officers are creating problems for one or the other reason, and the matters are under litigation. First and foremost thing in respect of 80(p)(2)(d) is that they have not used the term profits and gains of business. Two, they have specifically used the term investment. Income from investment need not necessarily be taxed under the head business income. It can be taxed under the head income from other sources, or it can be taxed under the head income from business. Therefore, in my humble understanding, 80(p)(2)(d) need not necessarily apply to those income which are otherwise taxable under the head profits and gains of business or transaction. With this background, the first and foremost controversy is whether such interest income can be claimed as deduction on net basis or gross basis. Of course, all the judgment, including that of the Supreme Court, says that it has to be on gross basis. On net basis, on net basis. There is one judgment of Doaba Cooperative Sugar Mills where I received interest from a bank and I paid interest to the same bank. The AO tried to net off the interest. The court denied. Of course, this must be understood that I giving loan to a bank and I taking loan from a bank need not necessarily be connected. If they are connected, deduction has to be given. If they are not connected, there should be no deduction. Whether 14A is applicable, this is of late surprising controversy because 14A restricts itself to deduction to expenses in respect of income which do not form part of total income, which are dealt with in section 10. Income of a cooperative society eligible for deduction under section 80P are not exempt income. However, they are income which are allowed as deduction, and therefore section 14A should have no application, held by Delhi High Court. However, there are surprisingly contrary views of the Punjab and Haryana High Court judgment, wherein they have held that 14A is applicable to compute deduction of expenses while computing interest or dividend income. With respect, it is submitted that 14A cannot be applied. Of course, it is an accepted proposition that deduction can be claimed only of net interest or dividend income, which is after claiming deductions. Rule 80 cannot be applied to compute my expenses attributable to such income. Expenses attributable to such income can be deduced on some other reasonable basis other than Rule 80. They use the term investment. What do you mean by the term investment? It is of very wide import. Various advances also get covered. Allahabad High Court has held that. Temporary loans covered under the term investment. Call deposits covered under the term investment. However, security deposit given to comply with provisions of an agency agreement is not an investment. The term used in section 80P2D is that I should have invested with a cooperative society. Does the term cooperative society include within its ambit cooperative bank? This is the first and foremost controversy which is created by the assessing officer. Definition of cooperative bank. If we read the definition of term cooperative bank under the Banking Regulation Act, read with the NABARD Act, cooperative banks are cooperative societies. Further, section 80P4 specifically excludes application of this section to cooperative bank. This implies that cooperative banks are cooperative societies, since 80P4 is only applicable to cooperative societies. Specific exclusion under section 80P4 to cooperative banks of a deduction under section 80P means cooperative banks are cooperative societies. Even otherwise, the Karnataka High Court in case of Totagar Cooperative Society, both judgments 395 ITR, 392 ITR has held that cooperative banks are cooperative societies. The second action of the assessing officer in denying deduction under section 80P2D in respect of interest from deposits with cooperative banks is that they are comparing the provisions of section 80P2A1 with 80P2D. So firstly, I am listing those judgments that are in favor of the assessee, wherein they have clearly held that investment in cooperative banks leading to interest or dividend is eligible for deduction under section 80P2D. First judgment is of the Karnataka High Court 392 ITR 74 CIT versus Totagar Cooperative Society Limited. They have also considered judgment of Supreme Court in case of 322 ITR 283 and held that judgment of Supreme Court is in context of 80P2A1 and not 80P2D. Further, the Gujarat High Court judgment 389 ITR 578 SBI versus CIT para 14. This para specifically deals with the aspect of 80P, though the judgment is not in context of 80P2D, it is in context of 80P2A1. However, the court clearly holds that in case if the investment is made with cooperative societies, judgment of Supreme Court in case of Totkar Cooperative Sales Society will not apply, because 80P2D does not necessarily require income to be from under the head business income. And the Mumbai Tribunal judgment in case of Lands and Cooperative Housing Society Limited has held that a housing society making investment in a cooperative bank, interest on such investment is eligible for deduction under section 80P2D. However, a big controversy was created by this judgment of Karnataka High Court, a latter judgment of Karnataka High Court 395 ITR 611 PCIT versus Totkar Cooperative Sales Society. If we see the history of this case, history of the assessee Totkar Cooperative Sales Society, this society is primarily engaged in two activities. One is providing credit facility to its members, and two, in marketing of agricultural produce of its members. The judgment before the case before the Supreme Court was that they had certain idle funds which were liability of society, which was payable to the members of the society in respect of the agricultural produce, was invested somewhere, and they had received the interest income. Supreme Court held that one, that interest income is income from other sources, and therefore ATP 2A1 deduction is not available, as it is available only in respect of your business income. So the Todgar Cooperative Sales Society, they shifted their investment from nationalized bank and scheduled bank to cooperative banks, and then they claim reduction of interest in respect of such deposit with the cooperative banks under section 80P2D. In the earlier case, the Karnataka High Court in 392 ITR 74 allowed deduction. They distinguished Supreme Court judgment, saying that Supreme Court judgment is in context of ATP 2A1 and not ATP 2D. Again, controversy came up before the Karnataka High Court. However, here, surprisingly, the Karnataka High Court has taken a diametrically opposite view. These are some of the points or findings of the court. They say that whether you invest in a nationalized bank or in cooperative bank, the nature and character of your income remains same as the nature and character of income which was there in case before Supreme Court. Two, they say that ATP entire section applies only when income is from business or operational income and not accessible under some other head. They rely on ATP 4 to say that ATP 4 excludes the application of income, application of section ATP in relation to cooperative banks, and therefore ATP 4 is capable of denying the assessee society deduction under section ATP2D. They relied on section 194A35 TDS provision, where the TDS provisions were amended to exclude cooperative banks from definition of cooperative society, and therefore cooperative banks were liable to deduct TDS under section 194A. To interpret that, the legislative has made its intent very clear that by removal of cooperative bank from cooperative society, the legislature does not want to keep cooperative bank or does not want to treat cooperative bank as a species of cooperative society. Then they hold that deduction provisions need to be strictly construed. They say that merely because investments have shifted to cooperative bank does not mean Supreme Court decision would not apply. And lastly, when they were given the judgment of the earlier Karnataka High Court judgment, they distinguished that judgment on the ground that they had failed to consider the Supreme Court decision in an elaborate manner. Now, this is the judgment of Karnataka High Court, wherein they have said that two propositions have been laid down. One, ATP2D will not apply to income chargeable under any head of income except profits and gains of business profession. Two, cooperative banks does not fall within the definition of the term cooperative society. This is what is coming out from the Karnataka High Court judgment. They are mainly swayed by the judgment of Supreme Court in case of the assessee society themselves. Is the judgment with respect correct? No, on the following grounds. I have tried to distinguish all these findings of the court. Firstly, they have relied on Supreme Court judgment in case of Totagar in 322 ITR. This judgment would not apply. This is because it dealt with the case of section ATP2A1, and ATP2A1 specifically has the word profits and gains of business attributable to, whereas ATP2D does not use the word profits and gains of business. They have specifically used the word interest and dividend derived from investment. Such interest from investment need not necessarily be my business income. Therefore, change in the depositor bank could make the Supreme Court decision inapplicable. Also, this aspect has been specifically upheld by the Karnataka High Court and Gujarat High Court in cases referred earlier. Two, the Karnataka High Court in the impugned case has held that for the purpose of Section 80P, income has to be your business income. With respect, only 80P2 clause A, B, and C deals with income under the profits and gains of business profession. Section 80P in its entirety is not applicable only to business income or operational income. In fact, if we see clause F, it deals with income from house property specifically. Therefore, this finding of the court with respect is not correct in my opinion. Thirdly, they have said that 80P4 is sufficient to exclude cooperative banks from 80P2D because 80P4 uses the term in relation to. It is with respect submitted that 80P4 has been enshrined in the Act only to deny deductions to a cooperative bank. It is not to deny deductions which a person derives from a cooperative bank. 80P4 applies only to an assessee who is a cooperative bank and not to an assessee who derives income from a cooperative bank. Further circular, which was circular number 14, which dealt with the explanatory memorandum, which gave the explanations why the amendment was made, they have specified that cooperative banks are functioning at par with other commercial banks which do not enjoy any tax benefit. Therefore, 80P has been amended. A new subsection 4 has been inserted to provide that provision of such section shall not apply in relation to any cooperative bank. This clearly says that they are comparing it with commercial banks, and therefore, when an assessee is a cooperative bank, deduction should not be given to the cooperative bank, and this cannot be extended to a person who derives income from a cooperative bank. They have relied upon the amendment in section 194A. With respect, it shall have no impact while computing deduction under section 80P. There are cases to the effect that the views taken while deducting tax at source, also the low tax or no tax deduction certificate issued by the assessing officer, would not have any impact while determining whether income is chargeable to tax or not. Further, they have said that the provisions have to be strictly construed, which is against the ratio laid down by the apex court in various cases in case of a beneficial provision. And most importantly, the earlier High Court judgment dealt with an identical controversy. They had taken into consideration the Supreme Court judgment. However, the High Court in the present case, they have erred in not following the same, and if they differed in the view, they should have at least referred the matter to a larger bench. Since in this case, judgments are contrary by the same division bench, therefore, in my humble submission, the earlier judgment should prevail unless it has been overruled by a larger bench or a higher forum. In any case, we have two sets of judgments, of one in favor and one against the SSC of the High Courts, and therefore view in favor of the SSC should be preferred. And I am not only referring to the Karnataka High Court judgment, I am also referring to the Gujarat High Court judgment, where they have clearly specified that income from interest and income in respect of interest and dividend derived from investment in cooperative society are not governed by judgment of Supreme Court in Thornburg. And the Karnataka High Court has held that cooperative society shall include cooperative banks. These two judgments read together, I think would be enough to sail through the deduction under section 80P2D. This is insofar as our 80P2A1 and 80P2D is concerned, the major controversies. Now coming to the other parts of section 80P2A. 80P2A2 deals with cottage industry. As a result of various litigations, they have finally come out with circular 1998, 722 of 1998, and they have laid down what do you mean by cottage industry, there are several conditions A to G. Some of the important conditions are that cottage industry is the one which is carried out on a small scale with small amount of capital and small number of workers. It need not be required to be registered under Factories Act, owned and managed by cooperative society, and activities should be carried on by the members of the society and their families. Place of work could be an artisan, shareholder's residence, or it could be a common place, and they should carry on the activity of manufacturing, production, or processing. Need not engage merely in trade, that is purchase and sale of commodity. So, firstly, they say that it should be an industry. They must be engaged in activity of manufacturing, processing, or production, and mere carrying trading will not be sufficient to make a society eligible for deduction under section 80B2A2. So there's a Delhi High Court judgment which says mere trading is not industry. Also, there's a Bombay High Court judgment where society which was servicing typewriters at customers' place was held to be not an industry, as well as it was not allowed deduction on the ground that it was not carried on at home. In this case, the issue arose whether an apex society which supplied material to primary cooperative society, and those primary cooperative societies supplied material at the grassroots level to their members, which prepared the goods and then passed on to apex society, and the apex society sold it at fair price. The Madhya Pradesh High Court held that in such case, the primary cooperative society would be held to be a cottage industry and therefore eligible for deduction under section 80B2A2. Here, it is important to note that the apex society itself is not engaged in manufacturing or production, but the primary society is engaged in. Still, the courts have held that it's a cottage industry, and the similar effect judgment is on the Rajasthan High Court. The next subclause 80B2A3 deals with profits and gains of business of a society engaged in marketing of agricultural produce grown by its members, which is attributable to such activity. So, a society engaged in marketing agricultural produce which has been grown by its members. The profits and gains of such business is liable for deduction under section 80B2A3. The first and foremost and important point is the definition of the term marketing. There are various case laws to the effect what do you mean by the term marketing. Supreme Court in case of Kerala State Cooperative Marketing Federation have held that marketing expression is of wide import. It involves functions like buying and selling, physical functions like storage, transportation, processing, and other commercial activities such as standardization, financing, marketing, intelligence, etc. For the Supreme Court in case of Broach District Cooperative Cotton Sales have held that when I get the raw cotton from my members, I engage in the activity of ginning and pressing of raw cotton, and what I sell is cotton bales. In that case, ginning and pressing of raw cotton would amount to marketing, and therefore society would be eligible to claim deduction under section 80B2A3. Here, if one notices, ginning and pressing is actually a process which has been carried out on raw cotton, which has been procured from the members. Supreme Court held that processing is necessary, essential element, and therefore they say that it's a part of marketing that society is eligible for deduction. Gujarat High Court has also held that all activities directed towards the flow of goods and services from producers to consumers would amount to marketing. In case of Kerala High Court, there they purchased latex from members, processed the same by centrifugal method, and then the product was sold. Kerala High Court clearly holds that what I procure from members and what I sell need not necessarily be the same product, and therefore a deduction was allowed under section 80B2A3. Therefore, the term marketing has been interpreted in a very wide manner to include processing, incidental ancillary activities. However, in case of sugarcane, matter came up before the Punjab and Haryana High Court full bench, which was in case of Bundelkhand. There the court held that processing of sugarcane to produce sugar is processing amounts to marketing, therefore eligible for deduction under section 80P 283. Matter came up before Supreme Court is Morinda Cooperative Sugar Mills. Department argued that it is nothing but your manufacturing of manufacturing, not processing, and therefore 80P 283 should not apply. Supreme Court, after laying down guidelines, what do you mean by manufacturing, has set aside the case to CIT to decide whether processing of sugarcane into sugar amounts to manufacturing or not. Further, there are court judgments to the effect that purchasing paddy from members, milling it and selling the same do not amount to marketing. Here it is important to know that in case of cotton and in case of rubber, if I process the good, the courts are holding that it is marketing. But in case of paddy, they are saying that it is not, it does not amount to marketing because paddy is a different product from rice. There is a distinction in inherent contribution. Profits and gains. Now the next issue is, what do you mean by the profits and gains of business attributable to? There are some judgments to the effect that subsidy relates to business of marketing agricultural products and therefore subsidy could be claimed as deduction under section 80P 283. To similar effect, there was a Supreme Court judgment in case of Meghalaya Steel. The Supreme Court allowed deduction of subsidy while computing deduction under section 80 IB. Similarly, the High Court in case of Curzon Cooperative Cotton Sale has held that interest charges, go down charges, insurance charges from purchasers amounts to profits and gains attributable to the activity of marketing of agricultural produce by its members. Now here the issue came that society has to engage in marketing of agricultural produce grown by its members. So if an apex society has other societies as its members and those societies have members whose agricultural produce has been taken over by the apex society and has been marketed by the apex society, can they claim deduction? Supreme Court has said that you cannot claim deduction because it has, the agricultural produce has to be grown by the members, and in this case it was not grown by the members but members of members. Similar view has been held by Rajasthan High Court with utmost respect. Here a liberal construction was required. It has not been taken into consideration. 80P 2A4 deals with a society which is engaged in purchase of agricultural implements, seeds, livestock or other articles intended for agriculture for the purpose of supplying them to its members. So there is a society of agriculturalists. They purchase some equipments, implements, seed, livestock to distribute it to their members. The profits and gains of such society is held to be deductible under section 80P 2A4. Now, what do you mean by the term other articles? The courts have held that the principle of jus generis should apply, and therefore it should be something which is directly required in connection with the process of agriculture. Bombay High Court has held that lift irrigation water. I install a lift irrigation scheme. I lift the water from canals and I supply it to the farmers. Supply of water amounts to supply of articles, and therefore one is eligible for deduction. Here, if one sees the requirement is I should purchase and then sell it to my members. Therefore, when I am not purchasing and selling and I am merely earning some commission, agency commission, courts have held that I am not eligible for deduction. Where the society was engaged in selling the implements or livestock or seeds to members as well as non-members, courts held that to the extent of sale to members, eligible, to the extent of sale to non-members, you are not eligible. One has to see, one has to apply their mind to see whether judgment of Supreme Court in case of citizen cooperative society would apply to the facts of this case where one is engaged in providing agricultural implements to non-members, because 80P 2A4 specifically caters to those type of societies which are engaged in providing implements, seed, livestock only to their members, which is similar to 80P 2A1 where a society was engaged in providing credit facility only to its members. There, providing facilities to non-members, Supreme Court says not eligible for deduction. Similar judgment or similar criteria can be applied here also, one has to be aware. Sale of fertilizers by primary society, apex society to primary society. court is saying you're eligible. Therefore, there are contradictory judgments under different clauses. Of course, profit should be on net basis. Supreme Court judgment in case of Sabar Kantha Zila Khari Sangh Limited versus CIT. This is insofar as ATP 2A4 is concerned. ATP 2A5 deals with profits and gains of business of a society engaged in processing without the aid of power of agricultural produce of its members. If one compares the provision of ATP 2A5 with ATP 2A3, ATP 2A3 is marketing of agricultural produce grown by members. ATP 2A5 is processing without the aid of power of agricultural produce of its. Marketing there has been interpreted, as we have seen, to include processing, like processing of cotton, processing of latex. They say it is processing, it amounts to marketing eligible for deduction under section ATP 2A3. Both the society can also claim deduction under section ATP 2A5 provided the processing is without the aid of power. Therefore, if the processing is with the aid of power, and the agricultural produce is grown by the members, I may claim that I am marketing the produce and may fall in ATP 2A3, and I may need not go to ATP 2A5, and even deduction cannot be denied because I am not fulfilling the conditions of section ATP 2A5. The issue here, whether, as we have discussed, Punjab and Haryana High Court full bench held that processing of sugarcane into sugar amounts to marketing eligible for deduction. Supreme Court has set aside the issue to the CIT appeal, and therefore this issue is still alive. If we compare ATP 2A3 with ATP 2A5, there marketing of agricultural produce must be grown by the members, whereas here the processing of agricultural produce must belong to the members. It need not necessarily be grown by the members, as has been held by the Punjab and Haryana High Court full bench in Budhewal Cooperative Sugar Mills Limited. Therefore, if you compare these two provisions, I feel that if it amounts to processing with the aid of power, I can claim deduction under section ATP 2A3, provided the agricultural produce is grown by the members. If it is not grown by the members but belong to member, I cannot go to subclause 3, I have to come to subclause 5. And I claim deduction of processing only if the processing is without the aid of power. Also, the Honorable Supreme Court and various other courts have held that if I am eligible to claim deduction under various subclauses of section ATP 2A, I fulfill conditions of one of the subclause, I do not fulfill the condition of other subclause, I should be eligible for deduction under the subclause in respect of which conditions are fulfilled, and deductions cannot be denied merely because conditions of other subclause is not fulfilled. ATP 2A6 deals with a society which is engaged in collective disposal of labor of its members. Profits and gains of such activities are eligible for deduction. Here, the proviso to subsection ATP 2 clearly says that deduction will be allowed only if voting rights are restricted to the individuals who contribute their labor, or cooperative credit societies which provide financial assistance, and the state government. In case where voting rights were extended to someone who was neither a laborer, nor a cooperative credit society, nor state government, the Gujarat High Court held that such society is not eligible for deduction under section ATP 2A6. In a case before the Orissa High Court, a group of engineers formed a society for undertaking labor contracts. However, such labor contracts were outsourced to some other laborers, and they were merely supervising the work done by the laborers. Court held that deduction is not allowable because society is themselves not engaged in the labor work, but they are merely supervising it, and therefore Orissa High Court denied deduction. ATP 2A7 deals with a case where a society is engaged in fishing or allied activities, that is, catching, curing, processing, preserving, storing, or marketing of fish, or the purchase of material and equipment in connection therewith for the purpose of supplying them to its members. Here again, proviso to section ATP 2 is applicable, which states that Voting right must be restricted to one, individuals who carrying on fishing or allied activities, cooperative credit societies which provide financial assistance, or state government. With this, I think we have completed section 80P2A. One has to remember that 80P2A only applies to profits and gains of business attributable to the activities carried on or mentioned in clauses subclauses 8(1) to 7. If we deal with 80P2B, again here the condition is that the income must be derived from profits and gains of business. The cooperative society must be a primary society engaged in supplying milk, oilseeds, fruits, or vegetables, which must have been raised or grown by its members. Supply must be either to a federal cooperative society, being a society engaged in business of supplying milk, oilseeds, fruits, or vegetables, as the case may be, or a government or local authority, or a government company or corporation. If all the conditions are fulfilled, then the whole amount of profits and gains of such business shall be allowed as captioned in section 80P2B. 80P2C. This is a residuary clause, if I may say. It allows deduction in respect of a cooperative society who is engaged in activities other than those specified in clause A and B above, either independently or in addition to all or any of the activities so specified. And the profits and gains attributable to such activities will be allowed as deduction in case of cooperative society, which is a consumer cooperative society, to the extent of 1 lakh rupees, and in case of other cases, 50,000 rupees. Therefore, if I am a cooperative society, my business income to the extent of those activities not covered in clause A and B will be allowed as deduction to the extent of 50,000 rupees, and in case of consumer cooperative society to the extent of 1 lakh rupees. Now, there are certain issues here, as we have already discussed in case of Supreme Court judgment in Citizen Cooperative Society. There, the issue was the credit cooperative society engaged in providing credit facilities to members as well as non-members. Supreme Court denied deduction on the ground that they are not covered, as only those societies providing credit facilities to members are covered. However, there are court cases where a society is allowed deduction in respect of activities with members, have carried on transaction with non-members, and in respect of transaction with non-members, courts have held that provision of section 80P2C would apply. Supply of agricultural produce to non-members is not eligible to deduction under section 80P2A4, but is eligible for deduction under section 80P2C. Dividend from shares in companies not eligible for deduction under section 80P2A1 is eligible for deduction under section 80P2C, provided these incomes should form part of your profits and gains of business. Now, there is some other interesting issue where society which was yet to commence production of sugar, engaged in sugar mills, had borrowed funds and deposited the funds in some deposits and earned interest income. Such interest income was claimed as deduction under section 80P2C. Allahabad High Court held that you are eligible to claim deduction, whereas the Punjab and Haryana High Court has disallowed deduction under section 80P2C. The ratio of Punjab and Haryana High Court was that 80P2C will only apply to profits and gains of business. If you have not commenced your business, your factory is under construction, there is no question of taxing it under the head profits and gains of business, and no question of claiming it as deduction under section 80P2C. After considering this High Court judgment, the Allahabad High Court has allowed the issue in favor of the SEC, held that if they interpret the object and purpose of section 80P and judgments of Supreme Court, interest derived from deposits are eligible for deduction under section 80P2C of the Act. Therefore, this is an item of pre-operative income where there are contradictory views. The Allahabad High Court later judgment, after considering the Punjab and Haryana High Court judgment, has held in favor of the SEC. Rental income, the High Court says that it is not your business income, and therefore you are not eligible for deduction neither under section 80P2A1 nor under section 80P2C. We have already done 80P2D. Now we come to ATP2E, where the deduction is allowed in respect of income derived by cooperative society from letting out of godowns or warehouses for storage, processing, or facilitating the marketing of commodities. The word used here is derived from. We have already understood the meaning of the term attributable to, where the courts have said that attributable to is wider in context as compared to derived from. Derived from has been a subject matter of interpretation by Supreme Court in Liberty India 317 IDR 200. They have held that derived from can only cover those income or sources which are not beyond the first degree. This is the meaning of the term derived from. Now, there are two interesting cases here. One before the Supreme Court where I was engaged in getting income from letting of godowns or warehouses for storage, processing, and facilitating. However, I was also providing incidental activity of picking up the goods or delivery of the goods. Supreme Court held that the main purpose of the society was letting off godown or warehouses, and transportation and delivery were merely incidental, and therefore ATP2 deduction cannot be denied. This is a case where the main object itself was letting out of godown or warehouse. However, if my main object includes letting out of godown or warehouses, apart from other activities, then the courts have held that income has to be apportioned towards the activity of letting out of godown. To that extent, you can claim deduction as ATP2E. Therefore, the case before the Jammu and Kashmir High Court and the Bombay High Court was that I was not only engaged in the activity of storage of the product, but also import, carriage, distribution. So the Jammu and Kashmir High Court held that income relatable to storage activity only would be entitled to relief under section ATP2E, and I have to apportion that income and I can claim deduction. Similar view has been taken by the Bombay High Court. Therefore, if my main purpose is storage, then even if I carry incidental activity, deduction is to be allowed on the entire income. However, if my main purpose comprises of composite activities, then only the proportionate income to the extent of income derived from letting out of godown warehouses can be claimed as deduction under section ATP2E. Further, Allahabad High Court has allowed deduction in respect of cold storage facilities by giving a liberal interpretation of section ATP2E. ATP2F, there are a number of conditions in ATP2F. It applies only to a cooperative society, which is not either a housing society or an urban consumer society, or society carrying on transport business, or society engaged in performance of any manufacturing operations with the aid of power. Second condition is such society's gross total income should not exceed 20,000 rupees. If these conditions are fulfilled, in that case, income by way of interest on securities or income from house property shall be allowed as deduction under section ATP2. We have completed our provisions of section ATP21 and ATP2. ATP21 is a general provision which allows deduction to a society in respect of various incomes, and ATP2 lists down the types of societies, types of incomes, quantum, and conditions, post which I can claim deduction under section ATP. ATP3 deals with the aspect of double deduction. They say that if a society is eligible for deduction under Chapter 6A Part C, dealing with deduction in respect of certain incomes like ATHS, ATHSA, HNP, HHC, HTHA, ATI, or Section 80J. In that case, while computing deduction under Section 80P, I have to reduce the income of the activity in respect to which I can claim deduction by the amount of deductions claimed under Section 80JJ, 80JJ, HH, HHA, 80JJ, etc. This is just to avoid double deduction. I may just draw the attention of the viewers to the Bombay High Court judgment in case of associated cashews, where double deduction was allowed or available under Section 80IA and 80HHC. There the court held that for computing the amount of deduction, you cannot reduce the income. It has to be computed independently, ATP, IA and 80HHC, subject to the fact that deduction should not exceed 100% of the profit. This judgment may be used in this context also. in respect of one activity, if I am eligible for 80P deduction as well as deduction under section 80IA, for example, I will compute deduction under section 80IA. I will compute deduction under section 80P separately, and I can claim deduction only to the extent that it shall not exceed my income from the specified activity. Supreme Court has these are some other issues of general points which are applicable to all the activities of section 80P. Supreme Court has clearly laid out that each clause under section 80P is a separate and distinct fact. If I satisfy the condition of any one clause, I do not satisfy the condition of other clause, I should be eligible for deduction, even if I am not satisfying the conditions of other clause. Further, the issue of net income or gross income has been clearly settled by Supreme Court, saying that only net income can be claimed as deduction after allowing the proportionate expenditure. Supreme Court has also held that in case of Kotagiri Industrial Cooperative Tea Factory Limited, that 80P can be claimed only in respect of income which has been derived after setting off of the unabsorbed losses of earlier under section 72. However, the Orissa High Court has held that when I am eligible for deduction under section 80P in respect of two activities, I am earning in one, loss in other, I need not reduce the loss of one activity against the income of other activity to compute deduction in respect of the other activity. The activity in respect of which I am earning profit, deduction has to be computed independently without reduction of the loss in respect of other activity. It's a very useful judgment. A society is also eligible for various other incentives like 80IA to 80IE, 35AD, as well as even AMT, alternate minimum tax, is not applicable to deduction under section 80P. So this is my part of section 80P deductions. If there are questions, if any, I'll be happy to do the same.
You can see the question. How should we argue in respect of disallowance of APP duty on interest earned by cooperative societies against IPO, and Commissioner was simply refusing to accept the arguments? How should we argue? How should we?
It's not coming here. So I received one question from Mr. Pranav. Mr. Pranav, that how should we argue in respect of disallowance of ATP2D on interest earned by cooperative society against ITO and commissioner was simply refusing to accept our argument. Mr. Pranav, argument before AO or CITB is very difficult because ultimately they are someone who are from department, and especially when we have two judgments giving contradictory views and one in favor of the department. However, an attempt should be made that all our arguments, all the judgments on which we rely, along with the provisions of the Act, should be put forth before the AO, and a request should be made that since judgments are in favor of the assessee, though there are judgments against the assessee, a beneficial view should be taken, especially where ATP is a beneficial provision and legal interpretation should apply. And I think we may expect some sort of clarifications either from the CBDT, or we may expect some other judgments to crop up and help the assessee after considering the judgment of Tutagar. We may find judgments of courts, even of the tribunals, where they may consider the judgments of both the high courts against and favor, and they may determine that since favorable judgments are there, we would follow the favorable view, and we should wait for those judgments. And at the CIT and ITU level, I don't think so we can expect any review because they're bound to disallow such kind of items. Thank you so much. Thank you very much.
Thanks. Dharan has given a detailed, uh, exhaustive analysis of Section 80P. I thank him on behalf of the Chamber and the Direct Tax Committee for taking out his valuable time and making a presentation. Thank you.